Let's take a look at your market news now. Asian shares fell and Wall Street was poised to retreat from record highs on Tuesday after Apple said it would miss its March quarter revenue guidance as the coronavirus slowed production and weakened demand in China. The warning from the most valuable US company sobered investor optimism that stimulus from China and other countries would protect the global economy from the effects of the epidemic. Japan's market lost a massive 1.4% today at the close of trade, ending the day at 23,193 points. The Hang Seng in Hong Kong was also down 1.6% to close out at 27,515, while the Shanghai Composite Index was slightly up, closing the day at 2,984 points. Let's get some more on the markets from Arabile Gumede, who's standing by. Very good afternoon to you, Arabile. What's moving the markets this afternoon?
Yeah, it's a good afternoon to you, Nzinga. So look, the market has certainly been trying to digest some of Apple's news, right? So we're getting estimates there saying that they may not be able to reach their revenue forecasts on that front. The coronavirus perhaps impacting things as well a little bit. They're unable to ramp up production at their offices out in China as quickly as they would have liked. So that's certainly not boding too well for them. So that has shifted the market along. It is poised to perhaps see the US market perhaps dip a little bit as well later this afternoon, of course, as that begins to open. Of course, yesterday was closed with President's Day there. The Asian market slipping as well, the coronavirus continuing to take on that market picture there. The hopes are that the stimulus out in China will continue to help as many, of course, of consumers continue to get them spending a whole lot more as well. How that comes about, however, we'll certainly only see, but we'll be right here to, of course, get that data for you. Let's check in on the numbers, though, and we'll get into the details right after this. Well, as you can tell there, the market's slightly down here in South Africa. It's actually 1% down, so a big fall on that front. Let's get more detail now. Sean Morrison from IGSA joins us right here at the Johannesburg Stock Exchange, and we'll get some information from him. Sean, thank you so much for the time. Really appreciate it. A big fall for the JSE today. What's actually moving the markets?
Well, initially we saw weakness in Asia stemming over to us. US index futures also pointing down. Markets were closed in the US yesterday for that President's Day. We see volume. It also was a light volume day. We're seeing, definitely some fear-induced. It's a risk-off day in the market from the coronavirus epidemic. And like you said earlier on, that the Apple story. It shows you that manufacturing and production is being affected in China. It is an indication that we are going to see a slow quarter, at least a slow quarter of economic growth within that region. And there's obviously a global economy now, so a lot tied to China. And then we're reflecting that. So risk off in the market. So we're seeing, rand weaker, safe haven assets like gold up, and it's reflecting on the underlying shares. Yeah,
to get some sort of sense of how much the likes of the gold price would enjoy this, 0.4% higher for gold, platinum going up more than 1%. Commodities are absolutely loving this, except for Brent crude, of course. That's going down 1.75% there.
Yeah, so Brent crude being a bit more of that barometer of economic growth, and as we said earlier on, China sort of growth is going to be stifled. China being the largest importer of oil in the world. By quite a margin actually, and so Brent, that's weighing on the Brent price. We have had some indications from OPEC, in terms of the supply side, that they could look at cutting 600 and OPEC plus, including Russia. They could look at cutting production, but that was last week. But the market doesn't seem to be too excited about that. They're more concerned of the demand side than they are of the supply side right now.
All right, well, speaking of commodities, Kumba Iron Ore comes out with earnings. Yes, yesterday we got the big news, and unfortunately Kumba becomes a slight sideshow really in comparison to Anglo Platinum and their earnings. But still interesting to note that there is growth in a lot of Anglo's businesses, and Kumba Iron Ore still being one of those.
Yeah, so Kumba Iron Ore, the results were good. Revenue up 40-odd%, EBITDA up even more than that. I think what we have to consider is that it was a good year for iron ore. We saw iron ore prices, at one stage up more than 70%. And that was on the back. We had the tailing dam disasters and production cuts from Vale, the biggest supplier of iron ore in the world. We also had some problems in Western Australia with inclement weather, so it stopped production from the likes of, or slowed production from likes of BHP. So what we saw is a nice spike in iron ore price. Since then, it's come down quite a bit. So while last year was a great, they would have benefited from that. This year, prices are subdued, and from that guidance, you'll see when I looked last, Kumba was actually down on the day. They're paying a hefty dividend as well, which investors generally like. But that price being lower, maybe just a bit of a worry about the year ahead, because they're not forecasting increasing any production. We know some of the other providers are going to increase production, and we know that the iron ore price is well, compared to where it was this time last year. The
CEO did make note as well that he still wants to try and ramp up, not just production, but really the life of their mines as well to around 20 odd years. Where do you find the ability to do that? And as you said, in a demand-driven economy and I suppose market where things aren't necessarily going your way.
Look, I mean, you at this time you'd think that that becomes capital intensive as well, which furthers the questionable the outlook for this year, 2020. When you are improving the lifespan, that you're not necessarily focusing on your long-term picture of the ore grade and the ore that you're achieving is the focus, but you're not sort of working on the operational efficiency. You're not going to be lowering your staff contingent, so you're still keeping those expenses high. So I'm neutral on a share like Kumba at this point in time.
A bit of a tough one there. I think Themba Mkhwanazi, the CEO, does have still a lot of work ahead of him. If we go back to the economic front, we're seeing the rand even go beyond 15 and pretty much looks like it might stay there. Over 0.5% weaker today. Moody's coming out with their growth forecast on the country and saying, look, we see you guys going, still at less than 1% even next year.
Yes, so that's so the rand would have had two negative catalysts. One is we got a risk-off day, so it's emerging market assets been sold off. It's a highly liquid asset, and then you have the domestic factor, which is the Moody's. I think that sort of lower growth forecast sort of leans into the fact that we think that we could have entered a technical recession in the fourth quarter of 2019. And then it's a precursor towards what we might expect after the budget speech in March, when Moody's does review South Africa's credit rating, where it seems bond markets especially seem to be pricing in that ratings downgrade.
That ratings downgrade is going to be a difficult one to swallow, considering that we are a week away as well then from that fated budget speech. Anything particular you'd probably want to hear from Finance Minister Tito Mboweni?
Look, I think it's all about the Eskom and the SOEs. Where to from here? We just want to see a tangible plan in place and starting to be implemented. At the moment, there's been a lot of talk and not that much implementation. And so it's about the SOEs.
Next week, Wednesday, is indeed the time where Finance Minister Tito Mboweni is expected to deliver that fated budget speech. It will be crunch time, essentially. South Africa will have to do quite a bit then to get the confidence of the ratings agency. Well, that's where we end things off here from the Johannesburg Stock Exchange.